What up, everyone? It's your boy Dio from funkla.com, frunkla.com. So, guys, today I have something very interesting for you guys. Stay tuned. If you are new on my channel, please hit the like button so the YouTube crazy algorithm can pick up this video and share it with other Tesla investors. Today, I have a beautiful news for you guys. I'm going to put Gordon Johnson of JF, whatever the hell his company name is, and Wesbush analyst Daniel Ives. I'm going to put these two guys together. And what I'm going to be doing is I'm going to bring out 5 points. The first one is going to be the demand in USA, if it's important or not to Tesla or not. And the second one is going to be if Tesla is better than if competition is coming, if Tesla is still number one. And the third one is going to be demand, Then the fourth one is going to be battery. And the fifth one is going to be if Tesla owns the market or not. So these 5 things, because according to Gordon Johnson, yesterday he came out and he set a new price target of $87. Meanwhile, 3 days ago, on the 23rd of this month, 2 days ago, Daniel Ives set a new price target of $3,500. This is not his first time. This month, this guy has increased his target like 3 times. Daniels of Wesbush. On the 12th of August, he maintained his neutral rating and set a price target of $1,800. Then 17th of August, he came out again and he increased his price target from 1,008 to $1,900. Then on the 23rd, he went crazy completely. His bull case scenario was $2,500. Then he pushed that to $3,500. Right now, Tesla stock is trading below $2,000. So I don't know how we're gonna get to this level. So today, this 5 points, I'm going to be putting Gordon Johnson on this side and Daniel Ives on this side, and I'll put them together. From Daniel Ives' previous interview and Gordon Johnson's previous interview, I'm going to cut it and put them together, so it's gonna look like both of them are in the same room talking to each other and trying to sort things out. So we have a bullish analyst, Wesbush analyst, Daniel Ives, and we have Gordon Johnson, the most bearish Tesla analyst ever. We have him on this side. We're gonna put both of them together. So guys, if you're on this channel, please hit the like button, subscribe to my channel. Come on guys, I have a lot of, look at my cap, look at that. I have a lot of beautiful things I'm going to bring up for you guys. So please hit the like button, subscribe. Let's get to it. I remain your boy Dio, and this is frontline.com.
Tesla right now, and why?
Yeah, our price target is $87 per share. That's a 2021 year-end price target. And listen, Tesla is detached.
That's why China is so key. It's really the hearts and lungs of the overall bull case for Tesla.
You say near-term U.S. demand for earnings next week is the issue, particularly Model 3. So it's near-term, it's U.S. demand and Model 3. Longer-term, it's China. That's how investors should look at it?
Yeah, I view it as near-term. The growth story has moved out of the U.S. to Europe and China. And that's why right now, if you look at the U.S., especially post-tax credit, what you're seeing, you're really going to see no necessarily, excitement from the U.S. piece. It's really about Europe and China. The drum roll is about deliveries. Can you get that 500K deliveries by year? And then ultimately, as you talked about, what's the profitability? Because if you could get to the profitability, then the trajectory, you start to get to that $15, $20 earnings power, which is why we try to scenario analysis going into the next, call it 6 to 9 months.
About the battery. What do you make of that argument?
Right. So that's been the argument, for the past 5 years. Here's the reality on the battery. They have a battery day 9/22. Tesla buys its batteries from Panasonic, LG, and CATL. Let's go to Panasonic. Panasonic makes cylindrical batteries for Tesla. Anybody can buy those batteries, but nobody's buying them. If you look at CATL said they're going to have a 1,000,000-mile battery. This was something that was rumored that Tesla was going to come out with on Battery Day. Anybody can buy CATL's battery. And LG Chem just announced they partnered with GM to develop new batteries. And then if you look at what Toyota is doing, they're focusing on solid state, which is the next generation. There is no secret sauce. Tesla does not make its own batteries. That has been a wide misconception.
It's going to be the 1,000,000-mile battery that will be announced at Battery Day in September. So you put this together. That's why a big fundamental reason for what the stock's doing is China. And I think that's why, in my opinion, $2,000 is the new bull case, with China being a big piece of that. And I think you look at these numbers today, a major feather in the cap for the bull.
If you look at their technology, the FSD, full self-drive technology, Navigate ranks Tesla dead last. Tesla uses radar. The technology that everybody else uses is LiDAR. And we don't think it's a chip issue, right? Elon Musk keeps coming out 2.0, 2.5, 3.0, 4.0. He keeps pushing out when there'll be full self-drive technology. We don't think it's a chip issue. We think it's a software issue. They're using radar versus LiDAR, and we don't think they're collecting the miles. We'd like to see where they're spending the money
right now.
miles. Listen,
if you look at this from Norway to the U.S. to China, Tesla's continuing to sort of own this market in a competitive mode. Part of it is the brand and of what Musk has built. It's that DNA, and I think that's something that continues to be pervasive, and that's what we saw in this quarter.
It's just a huge disconnect, reality versus what people are saying. Again, there's an analyst out today saying China's sales are great. The real data, July data, shows that they're selling less than what they're producing. So it's just the real data doesn't match up. We think when that matches up, you're going to have selling that.
How do you get to 2,000? Yeah, I think if you look at these delivery numbers, it speaks to what I believe is on the horizon. I think you're looking at what's going to be 1 million delivery vehicles in the next 2 to 3 years. But the big piece is China. The China market, in our opinion, is worth $300 to $400 per share. And when you look at these numbers in 2Q, in light of a pandemic, Fremont standoff, and a backdrop like this, a 90,000 delivery number is a jaw dropper.
VW, Porsche, GM, Ford, Renault, every single company is selling these, so they no longer need to buy those credit revenues, those credits from Tesla. So those are revenues that are going to go away. Those are 100% gross margin revenues that are going to go away essentially next year, be down 50% in the second half of this year versus the first half. So when you say, is that part of their business? Any business that is structurally dependent on taxpayers essentially giving them money versus being profitable in their core business, we don't think it's sustainable. So when you say, how long am I willing to sit with this call? Let's see if they print a profit, right, in the fourth quarter of this year, and let's see how their earnings trend next year, and let's see what their deliveries come in for the full year this year, right? This company is trading at a growth multiple that suggests their earnings, their revenues, and their volume should be growing exponentially every quarter. We're going to get the numbers for 3Q. We're going to get the numbers for 4Q. I think they're going to disappoint. And I think with all this competition coming in, people compare Tesla to Amazon. I think it's more like
China's the key, because I think right now that's on a trajectory for about 100,000 units in the first year. So that is neutralizing some of the softness we saw in the U.S. and Europe. Look, Tesla from an efficiency perspective, and we've seen this across the U.S. and Europe, you just have pin-up demand that's there, along with the production capabilities that is now back to normal, even after the Fremont standoff, in the first few months where, their core artery was shut down.
Technology that is outdated. You have new technology from automakers who are proven that are coming for Tesla's neck, if you will. And if you look at the EU, right, Norway, Netherlands, Spain, in the fourth quarter of last year, their market share was 37%. Quarter to date, 2Q, their market share is less than 3%. That's a market where you have real competition. So 37% to 3%. When have you ever heard anybody talk about these numbers? I don't think you have. So people are putting out, Tesla leads in technology. What technology do they lead in? They do not lead in technology. So I think when the numbers actually hit the paper and the credit sales go away, which even Tesla's got into a 50% decline in credit sales in the back half of this year, and you see those numbers, those losses start to creep back in. Again, 2Q, excluding credit sales, $300 million loss, I think the stock really starts to tumble. The point is, I don't think people understand what they own in Tesla. Everybody talks about this technology leader. They don't make batteries. The rate of last in FSD. But every time I talk, the question is, are they the technology leader? I don't think they are, and I think
today, right now, it's Tesla's world, and everyone else is paying rent on the EV market. Now, when you look at everything we're seeing on semis and look at pickup trucks as well, our estimates are Cybertruck pre-orders right now are close to 700,000. Now, of course, conversion is going to be the key there, but that's why you look at Cybertruck, you look at Model Y, you look at China, you look at some of the other opportunities. Today, overall EV is still 3 to 4% penetrated globally. And what's the best play out there? Tesla. And that's why it's a scarcity value, why the stock continues to move higher. I still think room to go.
Hey, Gordon, when do you expect $87 to hit? When is that? That 12-month target?
That's a 2021 year-end price target. So that's next year. We believe by the end of next year, Tesla's price will be at $87 per share.
Playing the bull scenario, though, what about bulls that say, look, this is really a technology company. You can't think of this as an automobile company. This is about software. This is